For when Irish eyes are smiling, sure it's like a morning spring. In the lilt of Irish laughter, you can hear the angels sing.
Well, how about that for a little bit of pre-St. Patrick's Day Irish eyes? It's like a little green at the end of the rainbow. What kind of green are we talking about? Another new equity high in the most amazing product and, of course, trading algo optimizer system out there that allows us to take these trades. I mean, this is pretty cool. If you note that I've been trying to give out, and we do this in the trading community here in our trading room, long position. It did get stopped out on a trailing stop feature. It chopped around. It went short. It is short right now, and there's already a trailing stop feature in the volatility VXX. If we take a look at the overall performance, I know I shared this with you the other day, but it just hit another. It's trading at another new equity all-time high, as you can see. So it is, if you're long equities or if you're looking for someone that's talking about volatility products, I mean, this is something that's right up every professional trader's alley. I mean, this is something that really is an amazing feat for those trading stocks and ETNs. Let's take a look at the overall weekly performance so far. All right. I think it'd be better to look at the daily performance, and that you can kind of see where it doesn't trade every single day. It just marks to market what the performance is from one day to the next. But overall, I mean, back in the big Kahuna crash, this was the one that was really kind of upsetting. But if you'll notice here, the big trades that it generates, they don't get much bigger than 10,600 because that's the in history probably the largest profit, and it automatically gets out rather than trailing a stop. Or, for example, if a market's profitable and it goes up and it comes back down and it trails a stop, where would you rather be, at the max profit or a trailing stop feature? 10 to 1 or the other. And on once in a lifetime situations that we had back in February, where the market did just what I was sharing with you, and I've done this before, I'll share it again. Once in a lifetime, it takes the max profit and then straight up. And so on average, if this was the only trade you were ever going to take in your life, then you'd say, why didn't you let it ride? However, as you can see, we've taken shorts and longs and shorts, and then what happens over time? It just builds its equity curve straight up. So we're pretty pleased for St. Patrick's Day and new high in equity. This is fabulous. So two things I wanted to point out about the volatility ETF, the VXX, is it's not really indicative of saying when it goes down that the SPY, the spiders, go up. It's saying pretty much that the spiders are not going down, and maybe there's no potential crash, plus one other component. This is an exchange-traded note that trades off the first two contract months of the CBOE's VIX futures. So as we get closer to each week towards the end of a month, you're going to get a contango crush, or you're going to the market's going to start to come in, the futures start to come in line with the cash. So this is always designed to, in periods of lower volatility or market rallies, it's designed to go down. But there are times that we want to take long positions, and I keep reiterating that throughout these little update videos. So that's what we had so far, another new equity high. And you'll notice, which is really unique, the S&Ps on Friday the 16th, right before, of course, St. Patrick's Day, thus the song intro of When Irish Eyes Are Smiling. You'll notice where we are as far as the lows. Now, this is this is an ETN that has had 1-for-4 reverse splits 4 times since its inception in 2009. So when valuations get too cheap, they just do a reverse split 4-for-1. this kind of situation, the reason I'm bringing this to your attention is where we are in relationship to where we were on the lows is nowhere near, or it doesn't quite represent what's going on in the overall equity markets, right? So if you look at the S&Ps, and let me bring that a chart in for us right now. We'll look at the advanced decline chart analysis here. If you look at where the S&Ps are, here's the old highs that we had, right? And if you look at where the S&Ps are relative to what the VIX is doing, it's not one-to-one. In other words, if we were going to be, if the volatility index is now at a new recent low, the spiders aren't at their recent highs. So again, if people ask, well, why is that? The answer is simply because of the vol crush. Just because the equity market's not rallying does not mean volatility's declining. There's just less movement, there's less fear in the market, there's less activity within, and in addition to, as time passes by, we get that contango crush in the marketplace. So this is a very sophisticated product to trade, and the Person Algo Optimizer has certainly allowed regular retail traders to capitalize on what is considered to be a very aggressive hedge fund type trading product and profit from it. Let's look at some other markets real quick. So this week, been talking about a potential tri-star doji formation in TBT, which would be representative of interest rates, yields going down, and therefore bond prices should go up. But what happened today on Friday, we've been noting over the last few days, while we've gotten the person's pivots, and I'll bring this into a little better focus here if we can get the whole week picture. There we go. This particular algo optimized settings has been taking more buy signals. The buy signals, you can see the buy signals going up, and then every once in a while, like yesterday, we started to take sell signals, and then today a major decline, and it capitalized on that by catching that move with the algo optimizer. Let's bring this into focus and zoom in on the setup here and the signals. First and foremost, you'll probably notice if you've signed up or taken classes or any of my updated courses or read my books, it's the low close doji. You'll notice the entrance here, and yes, it gets out. It's a predetermined, and again, we trade this with two lots, so we have a spectrum across different markets, whether it's the S&Ps, the crude oil, gold, etc., and the futures on two lots. It took the majority of the whole trend to the downside, which was really neat, because this is a kind of market that people don't understand. That you don't wake up at 8 o'clock in the morning nowadays and say, gee, I'm here for U.S. Open outcry session and it's time for me to trade, where we're in a globalized marketplace where in Europe and in London, traders are already actively trading our markets. So we've got to be alert and aware and have an algo system that can trade for us, or at least pick off signals and then identify that. So what does happen, and has been happening over the last few years, is you walk into the U.S. Open outcry session and here it is, and really nothing's going on. Currently it's short a couple contracts. Right now it's up a couple ticks, no big deal. But what the beauty of this is, it allows us to do a couple things, which I'll share this with you right now. So looking at the algo optimizer, we can find out what's the best and most profitable time periods to trade bonds. And in this setting, on a 15-minute basis, in this environment, it's between 4:30 Central Time and up to 1:50 Central Time. And so as you can see here, position sizing set on number 3, which is what? Right here, 2 lots. So money management, max trade loss, we don't like to take on a 15-minute basis. We optimize this. And in fact, that's part of what we've programmed. Find out, well, how much risk do I really need? And what's the best risk factor? $375 per trade. If it's within that scope, then take the trade. If you have a trade, for example, which is really nice about this particular line item that I just illustrated is, let's say, for example, you have a trade that's a great trade. It's just a beautiful, perfect picture setup. It's got a beautiful dynamic sell signal, and it says to get in on the close. And then your stop is above, X ticks above the highest high of so many bars. So what if that risk is $1,000, right? So what would you want to do? If you only have a system that's 70% accurate, gosh, 3 out of 10 trades are going to lose money for you. And what if you get 3 trades in a row that are loser? It's going to wipe you out, not financially, but maybe emotionally, and that's what can happen. So how about a function that says have a max loss of $375. So what that function does, just to explain, is, let's say, for example, you have that situation where there's $1,000 risk on the trade. If you have max loss set at 375 because that's the best performance, it won't take that trade. It's beyond your max risk. It will ignore the trade. So while you might have a big winner, on average, the best profitability is to ignore trades that have exorbitant risks to them, because in real life, most people who are day trading or actively trading during the day are not going to take a full 30 seconds type of risk on a 1 lot in the bond. Now imagine that's $1,000 risk. You're trading 2 lots, so now you're trading a $2,000 risk. I don't want to take that trade if I have to risk $1,000 per trade. So on a 15-minute time frame, we might get into that environment, and that's where the person's algo optimizer really does a phenomenal job for the average retail trader, because it helps you identify what the best time frame to trade is, execute within those parameters. It helps you to optimize to find out what the best risk-reward ratio is, and then there's another function in there that helps us to determine a trailing stop feature. So we have had a lot of success with individuals that have acquired the licenses for these products, and we initially had a total of 78 licenses, and quite frankly, we're down to 17 left, and we haven't really marketed this or pushed this out to the general public. But if you are interested in something like this, you certainly should give us a call. We are winding down the availability of the licenses of this. You can reach our office at 561-655, and that would be 1881. Or if you're watching this on YouTube, on our YouTube channel, you just simply contact us through the website. Last but not least, I thought I'd bring this into focus. Being it's the anniversary of Bear Stearns, if you do see these videos, you go to YouTube, you click on the YouTube channel there, you'll notice this chart way in the background. I don't know if anyone had noticed this, and quite frankly, this was a photo that was taken at the New York Traders Expo before the decline of Bear Stearns. And what we were illustrating using the Trade Navigator, which was one of the first software that actually put our indicators on their platform, it actually highlighted a sell signal, and this was before the big kahuna break. Remember, this stock was trading somewhere around 80 or so before that, when that market was making that double top type pattern, number 1, number 2. The number 2 point was lower than the number 1 point on this chart. And then behind my arm, you can see it's kind of going down. But I was giving an illustration that the market was forming, I think at this point in the full picture shows on balance. Volume below was also corresponding, showing weakness, relative weakness. So we were in a PPS sell signal, and the PPS indicator was maybe hard to see, but you could blow it up. It's right in there. It had a buy signal, and then all of a sudden it reversed and went short, and the market just plunged. And then probably about, obviously, 4 weeks or so, because usually the Traders Expo was around Valentine's Day. So a month later, a month and a half later, boom, Bear Stearns is out of business, gap lower in this huge ensuing, I think that the market opened at $7 or something like that, if I recall correctly. And just this huge gap lower open, and the rest is history. So anyway, interesting history, and just of all things to have a Bear Stearns chart and sharing with that signal, that sell signal, and showing how much selling pressure was in the market at the time. So our work has been dynamic through the years, and it continues to work in this environment. And I hope you find this, not only the video, helpful, but also as well as the products that we help to put out for traders to achieve their goals, making money. Thank you.